Have you been thinking about buying your first home, but you have no idea where to begin? Step number one, you need an agent that you absolutely trust and that you feel that you can truly connect with. Over the course of your buying process, you need to have absolute trust in your agent in order for he or she to be able to serve you to the best of its ability. Meaning that you need to disclose any material facts that is going to affect your buying process. Step number two is going to be getting pre-approved. And I want you to pause right there and just think about getting pre-approved. So if you can't get pre-approved, unless you have cash to pay for your home, you cannot buy a home. It's gonna be plain and simple. So now I'm gonna guide you step by step some of the requirements that you need to get pre-approved depending on what kind of loan you choose to get. If you choose to get an FHA loan, you're gonna have to put down 3.5% and you need to have at least 580 credit score. Typically, you're also going to need to be working at the same job for at the very least 2 years. If you recently switched jobs and you also got a promotion, you also probably got a pay raise. And that's typically not going to affect you. It would affect you probably if you, for example, recently got fired from a job and you ended up taking a pay cut. Switching jobs can be a little bit of a tricky situation, so it's always good to check with your lender. If you choose to go with a conventional loan, you will need to put down at the very least 3% and you will need to have a 620 credit score. If you're a veteran, thank you so much for your service. You will be able to apply for a V8 loan, meaning that you would only need to put down nothing, 0%. And you would need to have only a 530 credit score. Okay, now I want to talk about a couple of different things that scares the hell out of a lot of people. And that is, the first one is going to be private mortgage insurance, also known as PMI. PMI is not as bad as people think. PMI, you're usually given a PMI if you're not able to put down a 20% down payment, but it's not as bad as people think. You see, very recently I had a client who wanted to put down 5% for his down payment, and he was only gonna be paying $90 a month. That's right, only $90 a month. If you choose to hold back because you have to pay your PMI, well, if you're not a homeowner, you're still gonna have to pay rent. And that rent money that you're spending is just gonna go down the drain or into your landlord's pocket. Okay, the next thing that I wanna talk to you guys about is HOA fees. What are HOA fees, Carlos? Are they gonna get me in trouble? What are they? I'm scared. You see, HOA fees are not as bad as people think either, but there is this kind of misconception that they're bad and that you don't want them. Well, you know, HOA fees are typically fees that condos have for people that are not able to buy a home, or you just choose to not buy a home and you want to buy a condo. Condos are the ones that have HOA fees. But you see, you have to think about what kind of condo you want, because the HOA fees usually cover a lot of maintenance services that your condo provides. Okay, so let's look at a couple different scenarios right here. Let's say, for example, that you found this very, very nice fancy condo that has swimming pools and jacuzzis and tennis courts and basketball courts, beautiful lawns. Well, that kind of fancy condos are the ones that are gonna have the expensive HOA fees because they're gonna charge you the maintenance through the HOA fees. But if you compare it to a nice and modest condo that only has fees to cover water and garbage, you could only be paying about, maybe $200, which is nothing, because if you own a property, those kind of fees such as water bill and garbage, those can get a little expensive. So if you were able to buy a condo that only has an HOA fees for about like $200 to $300, it's really not that bad. Moving on, now we're gonna go to the exciting part that you've been waiting for. Now that you got your agent, now that you got pre-approved, and that you're feeling confident and you're feeling good, we're gonna start looking for houses. Okay, and in this part, it's extremely important that you communicate with your agent, so you let them know what kind of house you're looking for and the things that are important to you. Are you looking for a house with 3 bedrooms, 3 bathrooms, 4-car garage? Do you want a large lawn, a porch? Do you want a pool? It is extremely important that you're fully transparent with your agent so he knows exactly what you're looking for. Letting your agent know the features that you're expecting in a home is extremely important in order for him to help you find the right property for you within your price range. So once we found a house that you like, we're going to submit an offer, and then if the seller accepts your offer, we're gonna go into something called Escrow. An escrow company is kind of like the middleman that mediates between you and the seller. For example, some of the roles of the escrow company is to take your earnest money deposit, which is the deposit that you submit to the seller as a good faith that you want to move forward with the transaction. During the escrow process, it is extremely important that you don't have any major expenses such as buying a brand new car or taking a round trip to Europe for the weekend just to celebrate that you're going to buy a brand new home, because that could potentially affect your ability to actually move forward with the transaction. I could go into a lot more depth into some of the things that you shouldn't do once you get into escrow, but the very basis is do not have any major expenses once you get into escrow and your offer is accepted, because you could also put yourself at risk of losing that 3% earnest money deposit. The escrow process usually takes about 4 weeks, and during the escrow process, you get into something called the contingency period. Your contingency period is going to consist of 3 different steps. The first one is called the loan contingency, which is basically the lender is going to make sure that you're actually still capable of moving forward with the transaction and that you're still qualifying. The second part of the contingency period is going to be the physical inspection. And third, and one of the most important ones, is going to be the appraisal contingency, meaning that the lender is going to send an appraiser to make sure that the house is worth what you actually paying for. So after you conclude your contingency period, this is the part that you've been waiting for. This is at the conclusion of it, this is when you get the keys to your home. And congratulations, you have just become a brand new homeowner. If you found this video helpful, please give it a thumbs up and share it with a friend who might benefit from it. Subscribe to my channel, and if you have any further questions, drop it on the comments or feel free to reach out to me by text, email, or call. I am happy to help. My name is Carlos Mendoza, and I am a realtor in the San Francisco Bay Area. I will see you on the next video. Boom!